BlockFi's capital allocated to the money market mutual fund is not FDIC insured. However, the fund doesn't appear to be managed by Silicon Valley Bank. According to a new bankruptcy filing, defunct crypto lender BlockFi has $227 million worth of uninsured funds allocated to a money market mutual fund, MMMF, offered by troubled Silicon Valley Bank, SVB. SVB, one of the U.S.'s largest banks, and key partners to venture-backed companies, was shut down by the California Department of Financial Protection and Innovation, DFPI, on March 10, with no specifics offered at the time of the closure. The move adds to the recent Silvergate bankruptcy carnage, which has seen crypto markets tumble since the crypto-friendly bank's financial woes came to light at the beginning of March. Looking at the ongoing BlockFi bankruptcy case, a March 10 filing indicates that the firm has $227 million worth of capital in an MMMF offered by SVB. Notably, the filing highlights a balanced summary statement from SVB, which states that BlockFi's investment is not a Federal Deposit Insurance Corporation, FDIC, insured deposit, not insured by any federal government agency, and not guaranteed by the bank. The FDIC's federal deposit insurance covers up to $250,000 per depositor, however it does not cover the scope of money market funds. A money market mutual fund invests in highly liquid near-term instruments, such as cash equivalents and high-quality short-term debt instruments, and is regulated by the U.S. Securities and Exchange Commission. Investors are issued fund shares in exchange for their capital, and as such, BlockFi's funds may not be at risk despite SVB's troubles. SVB offered several mutual fund investment services, but according to its website it doesn't appear to have managed any of the funds itself. The firm lists big names such as BlackRock, Morgan Stanley and Western Asset Management as the fund managers. As such, the risk to BlockFi in this instance is most likely hindered by the fund's performance, and not anything related to SVB's financial woes. One firm that looks to be directly impacted by the SVB closure and the Silvergate bankruptcy is USD Coin, USDC, Issuer Circle. According to the company's latest audit report, as of January 31, $8.6 billion, or roughly 20% of its reserves, were held up in several U.S. financial institutions, including SVB, Silvergate and Bank of New York Mellon. The exact value held up in SVB and Silvergate is unclear. However, Circle issued a statement via Twitter on March 10 noting that the firm and USDC will continue to operate normally as it awaits clarity on how the FDIC receivership of SVB will impact its depositors. At the time of writing, USDC has dropped below the $1 peg to sit at 98 cents as per CoinGecko data.